Well, hello everyone. Thank you so much for joining us here at the Daily Gold and on the Daily Gold YouTube channel. And this is being recorded on Friday, September 27th, 2024. Again, thank you so much for tuning in. We have a great guest today. I mean, I almost want to call him Mr. Silver because nobody knows as much about silver as my guest. And he's David Morgan, publisher of the Morgan Report. You can find that at themorganreport.com. And Dave, it's great to have you back. First things first, because I know you follow the market technically, you're a keen observer of that, in addition to many other things. Silver right now kind of struggling around 32, that weekly resistance level, also on the daily chart as well. So, what's your take of what's going on here at the end of the month and end of the quarter?
Well, my take, Jordan, and thanks for having me on, is that we're probably exhausted for a while. I think we're probably near intermediate top, and for gold as well. I mean, I'm adherent to basically, the Dow theory, and Jim Dines years ago wrote about, the precious metals slash Dow theory. He always looked for silver to confirm gold or gold to confirm silver, just like the transportation and industrials have to support the Dow Jones index. So without it getting through 33 or even touching there, I think we're fine. Being in this market as many years as I have, to see a market get temporarily overbought and maybe a correction and backing and filling, as we say in the trades, probably healthy for the market. So, in a way, I hope I'm wrong. I'm going to put a video out later today for our membership, basically giving them three options. One, take partial profits if you think I'm right. Two, put on tight stops, especially anything that's leveraged. Or three, and my favorite, and that's to write covered calls on your top tier cash rich mining companies, which, by the way, using the IBD index finder, I forget that it's a kind of a momentum, institutional buying, how hard that sector is. It's a combination of many things. Out of my top six, and I only have six in the top tier, four of them are like 95 percentile or higher. So that makes me feel pretty good. I mean, stock picking works if you pick the right stocks. But as we both know, in the junior sector, it's basically impossible. I mean, I had a hot hand for a while, but regardless, our sector's coming back, and there will be a day like it was in the early 2000s where you could throw a dart at a dartboard and hit a stock, and it'll probably make money because the sector is so frothy and so enthused about the gold and silver sector. But we're not to that point.
Yeah, I mean, to get more momentum and excitement in the sector, and that to get to that kind of market that you're talking about, I mean, we don't want to get to the end of that market because that's bad, but to get
Yeah.
into the beginning of that, what are some things that you'll be looking for? Is it silver starting to outperform gold? Is it silver taking out, 32 or 35? I mean, what is there something in your opinion that we could look for that could give us a signal? Yeah, it looks like the market's like, yeah, it looks like now it could be ready to like really kind of accelerate or take off or get more momentum under it.
Yeah, I'd say round numbers, 33 in the silver market. And of course, we have to get to that level and stay above that level. So, and how long? That's a Morgan rule. I mean, I use 3 days in a row on above average volume. That works about 85% of the time. Very simple. You don't need AI to figure that one out. The other one is to see the ability for junior miners to raise funds. When the funds start to loosen up, then we'll see it. And the third one is institutional participation and really what the value plays are right now, which, believe it or not, or you believe it, but in our audience, somewhat, it's the gold miners. I mean, they have some free cash flow that's pretty impressive here. They got some margins that are pretty impressive, but they're under the radar at this point. There's a few smart, very smart money that's moved into the sector, but we start seeing pension funds, money managers, general funds that start to participate in this sector, then we know that the foundation has been set, which will bring up the mid tiers and the junior speculative stocks. So that's really those 3 points I think are the most important.
Okay, thank you for that. Yeah, I want to go into, well, I guess, I always have like five questions in my head. I'm trying to pare it down to a single question. Anecdotally, could you tell our audience what are you hearing from your contacts as far as like let's say generalist smart money or big money? Like, have they dipped a tiny bit into silver yet, or are they kind of just dipping into gold miners because they went into gold first? I mean, what is how does silver right now? I mean, is that something the big smart money and the hedge fund money are they even thinking about it yet, or what? I mean, what is your sense of what they're thinking?
Yeah, great question. So from my, from where I sit, the retail market's pretty dead. So most of the retail investors have bought silver or bought too much, or they bought it when, there was a quote unquote silver shortage and, people were talking about, I've never had it so hard to get silver. Well, that's the retail market. Retail silver was hard to get, but the silver market itself wasn't. Anyway, the point being that they might have bought it at 25, paid a $5 premium. So now it's a 30, and then they broke even and it hasn't performed in the time frame that they wished or whatever. But on the larger scale, the big money, I'm talking about, business owners, people that have been in the system and starting to wake up and say, geez, David, I've got, 1 million, 2 million, 3 million in the bank. I'm scared of the banking system. I think what you said and others is correct. I need to hedge. I've never bought gold before. How do I do it? I don't want to make a mistake. So I've seen that. And then I've talked to hedge fund managers and my associates overseas. And that's sort of the theme. Most of the big buyers are coming outside of the US. The ones that are coming in the US are not your typical buyers. They're like first time buyers or second time buyers with a lot of money to protect that are coming to not just me, I'm sure it's across the board, but the signal is that they are making a change. They're taking, I've got stock market profits, I've got real estate profits. I'm not as bullish on real estate. I sold some commercial properties before the big downturn. I've parked this cash. I want to buy gold. I want to buy silver. What do I do? I'm not saying I'm getting, 10 calls a day. That's be incorrect. But in 1 month, I had like three of those, which on my level, which I'm not a Wall Streeter, as you well know, that's a pretty good indicator that people of means, and it's I'm for everybody, know that. But the point being, it's just a different market. It's a market of well-heeled people that have basically gone along with the program and realized that the program is unraveling and they better do something.
Yeah, there's a couple of ways I could go. Let me get back to kind of the short term and the technical. So I guess it's a shorter answer, but or you can make it long if you'd like. So let's just presume we do have a pullback here, an interim peak. Do you sense it's something that could last like a month or a couple months or maybe even 6 months? I know, as you say, we're just assessing probabilities because nobody has a crystal ball. But what's your sense of how far, how much the market could pull back if it does?
Yeah, great question. Again, this is for entertainment purposes. I mean, I absolutely do my best. I'm a straight shooter, as almost anyone knows. Am I human? Yeah. Do I get it right all the time? No. So the way I'm going to give you some specifics. We're going to answer in a general way. So the pullback is going to be strong enough to scare out some, and the duration is going to be long enough to scare out some. So now what is that? Well, if a day trader, maybe it's 2 days. If you're a swing trader, maybe it's a month or two. My sense is probably 2 months. And as far as the um, amount, we've had what 30% move this year in gold, or round numbers, it's about. So if we take a third of that away, which would be what Fibonacci retracement is, what refresh my memory, 1/3 and
38.
yeah. So right in that range. So I think it'd just be as bad as the first Fibonacci retracement. I don't think it'd be a half. It could be, even if it was a half, we're still up more than most asset classes for the year. So that's my sense, Jordan. And thanks for asking, because I've thought about that the last couple of days before I do my video. I'm kind of getting a preview of what I'm going to tell my members later on today. But no panic. In fact, a couple of my guys have said, man, I'm really made some profits on the top tier. Should I sell? Well, yes and no. You always have the final decision, but this is not the blow off top. And even if, is this an intermediate top? I don't know. I think it is.
Okay, let's talk about something more exciting. I mean, it probably depends on, when, again, presuming when silver gets to $50. I mean, it's hard to ask since it's not there yet, but what's your sense of when it gets to $50, how long the pullback could be at that point? Like I mean, again, I know we're just for entertainment purposes only because we're speculating on the future. But as you know, the last couple of times it got to 50, it took a while to get back there. It's not going to take as long this time. So what's your sense of um, when silver gets to 50, presuming it's in the next year, 2 years, how long it might pull back or rest at that point, even if it, you know, I guess, I mean, I'm presuming it will, but I mean, your sense.
Yeah, no, again, thank you because I've been a market student for a very long time, which isn't just gold and silver. I mean, to be a good gold and silver analyst, as you well know, you got to look at everything. You got to look at the bond market. You got to look at the general equity market. You got to look at, within the stock market. So anyway, the point is that in the commodity sector, usually three tries and you're out. Meaning that, you hit 50 in 1980, you hit 50 in 2011, and this time would be the third time, which you'll probably retrace. So my sense is that we'll get to 50. Is it 50? It could be 48, something like it was in 2011. It didn't hit exactly 50, not even intraday from memory. But we get to 50, and then we get a big pullback to 40. But it rebuilds at 40. And then the next time through is like 2 weeks later. I don't think it'll be that sharp, but maybe a month or two. And all of a sudden it goes through 50. Everybody's selling short. It can't get past 50. Morgan doesn't know what he's talking about, and it breaks through. And once it breaks through, all those stale longs, everybody that's in the silver market doesn't even know what to do because it's at a new high. And half the silver lovers don't believe it's going to get that high. So they're going to hold because they don't know how high is high. Now any new buying is going to take it to 60 and then 70. I still think we have triple digit silver in our future. And I think that the offtake on the physical side is strong enough to kind of quell the market, even in these big dips or scary corrections. And the monetary base is so fragile with going into what we both talk about often, and that is what's the debt or credit situation. I mean, it took 200 years to get to $1 trillion in debt. 200 years. Now we're printing up a trillion every 100 days. So we are in that exponential function. We're just starting it. But people, as a few of our compatriots have said, one of the biggest flaws in the human experience is the inability to understand the exponential function. And no one learned it better. Well, I was going to say no one learned it better than I. Let's just say that misstatement, but I learned it well because of not knowing any better. Trading futures at a young age and seeing that exponential function and not knowing when to get out taught me a big lesson. Always sell into strength. So when you see that take hold, it's limited time. You don't know how long. It could go straight up for a while. I watched gold go from 300 on the futures market to 850 or 872 on the spot month on my birthday, in 1980. It's a little past 1980. But I mean, that's exciting. When you see a futures market go like that, you're holding on saying, oh my goodness, but you don't want to get greedy. You want to sell so there's some room left to the upside. So hopefully I answered that. But I think exciting times are ahead of us. And I also think that the market is so broad now as far as with the internet, shows like yours. I think there's a lot more educated people out there that when things really start to move, they're going to get in that momentum, fear of missing out. Real estate's not performing. My stock portfolio is down. I'm going to sell some of these stocks and move into gold. And when that starts happening, that momentum is going to take off. And it's such a small market, as Doug Casey's and others have said. It's like, trying to put things through a fire hose, man. It's like you just can't take it all. It's coming so fast.
Yeah, I think there's something that you said that's so important that when the market, or just presuming when silver will break 50, because I mean, I've called it could be the biggest breakout of all time. Although actually, I think I looked at commodity prices to me when they broke out in 1971, that was like over a 100-year base on that. So aside from that, it will be the biggest breakout of all time. And you made such a great point. It's almost scary because at that point there's so much, momentum that comes into the market and the accelerate. Like you can't. It's so hard to predict. Like you just don't know where how much it's going to go up, where it's going to stop, how much it's going to correct, and you might be making tons of money in the futures market, and the next it's just you could lose a huge chunk of it the next day, or you could make even that much more. And I love hearing the old war stories. And so let's go back to the parabolic move in 1980. I mean, you mentioned gold. Were there people at the time when you saw gold going to 300, 400, or silver going above 20, 30? Like, were they predicting that? Gold could go to 500 or 600, or silver could go to 30, and then they just super exceed what everyone thought? Or were there some people saying, oh, gold's going to go to 1,000 and silver go to 100? Are there any other anecdotes you could share about that time when it went parabolic?
Yeah, I'll share a couple. Some of the letter writers in the day were saying 1,000 ounce gold, and it got 85,
That's
90%.
good marketing, by the way. I'm sorry to cut you off, but yeah, that would be good marketing.
So there was that, and then the late great, and I got fairly close to him at the end of his life, was Harry Brown. And Harry had a guy that worked with him that actually ran the a fund, and basically suggested to Harry that $50 silver was about it. So Harry got out, told his people to get out right, very, very near the top. And then Jim Sinclair uh, called the top in gold. No one else did. By the way, Jim Dines, who I followed avidly in those years and I have on and off, and still have a great admiration for him. But silver peaked, as I said, on my birthday in 1980, and he didn't really put a sell in until it dropped to 400. I sold before that. I didn't get the top, but I got out about 700, which is very good in the day. Um, but yeah, so there were a few, and of course there are some I probably didn't read or see or whatever, but there were some that were, Jerome Smith, bless his heart. I mean, the silver guru in the day. I mean, he was forecasting $100 silver, and we only got halfway there. So there were some that were, spot on. Harry Brown and Jim Sinclair. There were others that were well followed. So the Dines letter, you got to remember, it went from 300 in like December 1st to 850 6 weeks later. So it wasn't above 400 for very long. So if you follow the Dines letter when gold was coming off of $42 or $50, and silver was at 92 cents, and you sold at you still made some pretty healthy profits. And the other thing I think is important to mention just came to mind. I think this is extremely important for our listeners. The gold stocks carried on for another 6 months.
I was going to
So
make
you
that
had
point, but
time to
continue.
make a lot of money, and I did, because the earnings were still there based on that 850 gold that they were mining and contracts and all that. So you actually had, let's say, some real breathing room to kind of reanalyze where you thought the market was going, and take some really healthy profits, because the gold stock index didn't drop as significantly as the gold price did. So there's that aspect to consider as well. I like both. I do both. I mean, I always teach people, buy the real metal first. I don't want you buying a Morgan report until you have stacked something. But if you're there and you want the leverage, it's there. I mean, my top gold pick, at 2011, gold was $2,000 an ounce. And right now we're at 2,600. But that gold stock has tripled. So that'd be the equivalent of gold being at 6,000. So it does pay to pick the right stocks. It's just an excuse the ego, but you got to know what you're doing. And that's why they subscribe to people like you and me. And that, not everybody does that, because on the aggregate, on the average, you're probably better off buying the metal itself. I don't argue with that. But I also argue the other side, that if you know what the hell you're doing, you can do much better than the metal itself. But if and only if you're very selective, you weight the portfolio, and you follow the rules.
Yeah, that's great stuff. Sticking with war stories, I know you mentioned this is anecdotal, but I asked Rick Rule about this because I remember I saw someone mention it on Twitter, and then I was reading about it under Washington State history. The Spokane Stock Exchange in the 1960s. I know you know that gold stocks did really well because I mean you follow this stuff and you've studied it long before me or most other people have. But yeah, the gold stocks did really well in the 1960s again, as you know. But as I was reading, there was this huge boom in junior silver stocks on the Spokane Stock Exchange in the 1960s. I know you said you've read everything, you've heard tons of stories about it. I mean, anything you can share with us about that?
Well, they're secondhand stories, but I've been in Spokane 25 years. But a lot of my seniors, some are no longer here, told me story after story about just how insane the Spokane Stock Exchange was. I mean, you can take it or leave it. From my perception of these stories, I mean, it was definitely the Bitcoin of the day. I mean, there were people buying, 12-cent stocks that hit 100, hit $1.20 a week later. I mean, and some of these names, Vindicator, I mean, they had all kinds of them. Most of them were over in the Silver Valley, and these penny stocks just ran like crazy. And it was very, very exciting. I mean, it was much more of a free market buyer beware situation. You still have to apply that idea today as well. But in those days, it was the wild, wild west. And I just have, a lot of stories of people making a lot of money, people losing a lot of money, people making a fortune and then getting back in the market at the wrong time and losing it back. A lot like gambling, but there were underlying resources in some of those stocks and others. They were just promotions and just a wild time. I mean, I was also told about some of the early investment conferences in those days. And, I'll try to keep this YouTube friendly, but, they had like, the moo juice or something in the morning. And it was like, eggnog with some brandy in it. This is going around at 6 in the morning to get primed up to get back on the stock exchange. I mean, crazy time.
Yeah, that's I love hearing about that. Yeah, so moving on from that, okay, let me ask you this about silver because I know you know this, but silver, like it's basically struggled or at least been down in every recession, I think, other than 73, 74. So how would you counsel someone who is a gosh, I really like silver here and now, but I'm worried there's a recession, it could go down significantly. I mean, how would you respond to that if kind of, I don't want to say that negativity, but that kind of bearish outlook, like someone, yeah, I really like silver, but I'm waiting. It's going to have this big move down when we have a recession.
Yeah, I think that's very pertinent. And you have to look at the times you're in and you have to look at history. So right now, I think you need some silver exposure. Maybe you want to lighten up relative to gold in a recession. But right now, most of the silver demand on the industrial side is priced inelastic. So their demand remains almost constant. And the other side is monetary demand, which is what really moves the market. If you're buying or selling silver for investment purposes, that's the margin. That's the one that varies the most. And that one is one that, oh, it's a recession. I'm going to, sell my silver. I'm not going to buy. I'm going to wait or whatever. I think that's going to flip this time. And the reason being is that we're heading more toward an inflationary depression than we are a deflationary depression, which means right now we're in stagflation. So you're getting higher prices and no real increase in the overall physical economy. So, stagnant as far as the workforce goes, as far as opportunities go, but yet everything's costing you more and more, groceries being the best example, housing, another example. So, in that environment where we're leaning more toward an inflationary depression or a recession, that mitigates the need for dumping silver because of the price going down, because the value is going up. That silver dime that's buying you, what is it, 250? So half a gallon or more of gasoline buys you a full gallon of gas because the value is increasing. So I think it's going to be different this time. And I don't want to sound like a perma bull. I mean, I've called every top on the way up. I mean, I called the 850 interim top before anyone even knew the word silver. I called the $21 top. When it hit that, Robert Prechter said, that's it. I said, that's it for now, but it's going higher, which I was right. It did. and I called the $48 top at the end of April 2011. So, I don't think too many people that actually follow what I do could get mad at me. Some can, that's fine. But as far as not being a one-way Charlie, I'm it. I'm not a one-way Charlie. But this time, I think the panic and the FOMO is going to be fear of failure of the dollar. And if you work on fear, that's the biggest motivator there is. It's more than greed. So when people are worried that their life savings or whatever is going to go to almost zero purchasing power, the movement of the metals is going to go, in my view, into the history books. Like you said, the biggest move was after 100-year base in commodities, basket of commodities. I don't know which one you use, but regardless, you're right. And this might be the second one. And there's no fever like gold fever, and that spills into silver. And I saw that in the 1980 bull run. People looked at gold saying, "Oh my God, gold's $500 an ounce. Are you kidding? That's like 5,000 right now, maybe 10,000. Who can afford that? Not many, but silver's only $30, and away we go."
Yeah, I wish we could end on that, but I do want to follow up on the industrial side because I've always been a long skeptic about that. I mean, everything I've studied, you get a big move in gold, that's what creates the big moves in silver. But, things do change. So give me, set me straight here on the industrial side for silver. Like, when does it matter? Does it really matter? Is it going to matter more in the future? I mean, set me straight here and provide us some education.
Yeah, that's a good one. So the way I look at it is this: if I'm a very objective observer of the silver market or any market, but the silver market, when silver is sold, the bar of silver that gets shipped out never asks itself, "Hey, am I being used for industry or am I being used for investment or jewelry or silverware?" It doesn't care. So demand is demand in the long run. So if you look at industrial demand and you go back 25 years ago, the industrial demand of silver was 35% of the total. And at that time, the most silver we mined at that time was 550 million ounces. Today, we mine and recycle 1 billion ounces. And the demand on the industrial side is 60% of the market. So the industrial demand obviously has increased substantially in the last 25 years. But that's kind of like a stock buyback program. It helps because it's a constant demand, but if the supply is still greater than that demand, and it has been, with very few exceptions that were temporary and usually on the retail side, then you have to look at, okay, that demand has always been met. So whatever the mitigator is what you have to look at, which is investment demand. And investment demand has moved all over the place. Now it's up to about 10% of the market on a good year. So now what you have to look at is what does it do going forward? And if you do that, what you find is the projection, so forward-looking statement, caution, caution, is on the industrial side, it continues to grow. We're going to what Jim Dines called a natural corner. So cornering the market is based on usually trying to buy up enough contracts to take over a market, like the Hunt brothers. Whether they actually tried to corner the market, I'm not going to debate that at this time. But that was, purely investment. Here we have an industrial demand. And so now if you look at a curve that I put on a couple of presentations, I'll send it to you after we get off our interview, is that the demand is in a deficit now and has been since about 2023. And that deficit is 200 million ounces or more every year, going as far as the eye can see, according to Matt Watson's work. I agree with him. What I think he's wrong on is that the investment demand remains constant at 200 million ounces. I think you believe what I believe. Once we get a degradation in the financial markets, and the only place to go ends up being the metals because real estate's not working, stock market's not working, the bond market's in disarray, my business isn't doing as well, I'm going to protect some assets, then we're going to be in the 300 million ounce demand or maybe the 400 million ounce demand. If that's true, and that's the one that moves the market. It's always the margin that moves the market. The margin is how much do I need to be in the metals market because of fill in the blank. So that's the way I see it. I do believe, again, that we are in the early stages of what I consider to be the third leg up. If you're an Elliott wave guy, and I'm not, but I do believe the basic principles of 5 waves, 3 up and 2 down. We had them move up, down, and now we're going to repeat what we saw from the financial crisis getting in 2009 when silver bottomed around $9, went up over 5-fold to about 48. So usually the third leg up is shorter in duration, but double in expectation. So if we went from 9 to 48, if we did a double of that and did a 10x, we hit what? I forget, and I bought $14, $15 silver during that 2-day time frame when the illness came out in March of 2020. So take a 10x from there, you're still at $120 silver. So I do really believe that that's going to be the case. And of course, the hard part for you and I is going to put out a sell signal, because the FOMO is going to be so strong. We're going to get a lot of pushback that you don't know what you're doing. You gave up your trader. You're working for the Rothschilds. I always knew it. All this crap is going to come our way. And all we're trying to do is our job. But we do have a very important question to answer. And that is, do we trust going back into fiat? And the answer is, I don't know. But I do know my answer, or partial answer, is going to be whatever I suggest. Take a hard look at where you want to place it. So I'm thinking fiat as a very temporary thing. Go into that cheap real estate, buy those warehouses that nobody wanted to buy for 2 years, because there's almost always something that's cheap in the market when something else is expensive. So.
Yeah, great point. Dave, I know we could go on all day here, but you and we have other things to do. Just love your analysis, love your knowledge of history and the entire market. As we close here, tell our listeners about the Morgan Report and where they can go to subscribe.
Well, thank you. Yeah, it's themorganreport.com, and have a look. I have a free service, and I also have a paid service. And then just take it another minute. I'm also doing a documentary on the money problem, the money control. It's called silversunrise.tv. I'd appreciate people going over there and watching some of the trailers. The great G. Edward Griffin is in the movie. Foster Gamble, who did Thrive 1 and 2, is in the movie. Web of Debt, Ellen is in the movie. A lot of really notables in our space that have kind of led the way. I mean, you can't get, I think, better than, G. Edward Griffin and his book, to come on board. So I'd suggest, and just take a look at the trailers. Yeah, we're looking for donations, but don't feel obligated. I just want people to be aware of it. So when we do launch around Christmas, a lot of your base will be helping us all by re-educating or putting out some education about the fear and control and stress that money brings to our lives, and what we can do to regain our freedom and regain our prosperity and regain our purchasing.
Yeah, well, when you have that up and ready, hopefully you can come back and we can talk more about that specifically. And in addition to that, in the future, Dave, I'm looking forward to doing this multiple times over the coming quarters and years as, this fledgling bull market gets to a really, really exciting point. So thanks so much for your time. And hope we can do this again in a couple months.
I'm ready. Thank you.
Thank you for tuning into the Daily Gold podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.